Sweet. We are good. Welcome into today's scale call, y'all. Today is Thursday, March 16th, I believe. Yeah, that's right. Halfway through March, almost at the end of Q1. And today we're going to be asking the question, where did the money go? This is a follow-up to last week where we looked at, hey, if there's a difference in what I'm seeing monthly versus what's on my P&L, what do I do? And that begs the bigger question, well, what if I'm looking in my bank account and grossly it looks like I should have a lot more money than I do? Where did the money go? It's the number one question we get from people joining CEO Finance Academy. It's like, I have no clue what happened to all this money. And it's often funny when Scott is on calls with people before they join the program. And maybe it was you and me when we were on initially. We would ask people, hey, how much did you make last year? And they'll pull up their numbers and say, I made this much, or I made $1 million or 2 million or whatever. And then they'll say, but I have no clue where that money went. That seems like a lot more than I have now. And so over time, I just started realizing, there's got to be some way that we can go hunt that money down. We've done it for a number of clients and kind of pulled together a process for it. And so I want to give you a chance to kind of self-audit a little bit today and see where the heck did my money go? And if it's something that is of concern to you, then what I'll do is I'm going to pop in the spreadsheet right now. It's not in the official dashboards yet. I just kind of wrapped up the first draft of it today. So I'm going to drop a link in the comments here. And if you are watching on the replay, I'll probably put this actually in your dashboard, or we can pop the share link as well down below. So let's see. We'll call this, where did the money go? And what I would encourage you to do is, well, you know what? I'll give it to you in a little bit. Let's sit back, relax, and enjoy the ride for just a minute, and then we'll share it with everyone. So first of all, if you have any questions or topics today that you want to hit on, I'm not expecting this one to take up our full time today. Maybe it will, but would you just type in the chat one topic of interest to you right now around your finances? Maybe it's like, hey, I got to understand taxes better, or, I'm really working on figuring out this, or I've got, maybe it's a question on quarterly, what you do. Will you just type in one specific thing that you would love to either learn about or talk through? It doesn't have to be a today topic, but maybe it's something that's coming down the road. Last week we had a really interesting conversation, maybe it's 2 weeks ago, with Dan, and looking at kind of selling your business and what needs to be in place for that. But as we were brainstorming topics the other day, Sahira is going to be coming in and taking over some of these calls, because she's got really, really good insight on a depth of things that I don't have any, Will and I don't have any experience with. And so Sahira's going to be taking over with some really cool topics coming up starting in a couple of weeks. Next week, fingers crossed, we have our bookkeeper coming in to answer, to teach us how to look at a balance sheet without feeling stupid. And most of you feel like, I've got a decent handle on profit and loss, but I get a lot of questions around balance sheets, and we don't get to spend as much time on them. And so we invited in Rick Brunson, our bookkeeper, to sit down and talk us through what the heck's going on with balance sheets. And we'll talk through owner's equity and look at how to read a balance sheet, from a business owner idiot's perspective. And I'm speaking of myself, of course, there. And then we'll get into a couple other topics. So a couple things. Will says measuring marketing efforts. Oh, so good. Court says cost of employees, raises, bonuses, projections. Sweet. Great stuff. Julia, Dan, and Heather, if you've got a topic that you want to cover in the future, will you just put it down right now? Like, what's one thing that you want to cover? All right, let's hit it. Let's try this out. Does this work? We'll see. Oh no, I got to bring my eCam live to the front here. Cool. Can you see my iPad now? Oh, it's backwards. That's really interesting. That's not going to work, is it? Let's go here.
It's forward for me.
Oh, it's forward for you. It's backwards for me. That's funny. Okay, good stuff.
Yeah.
That's right, because Zoom mirrors my video. There it is. All right. So we're going to talk about where'd the money go today. And as we're thinking about this, let's set up the problem. The problem for a lot of business owners is they make all this money. They get to the end of a year. They look at their profit and loss statement and they say, gosh, I made $1 million or $500,000 or 250K or 5 million. Where did it all go? And so we're going to talk through the 4 big categories of where money leaks away or kind of sneaks away from you without you realizing it, that often doesn't show up on a profit and loss statement. So you might be looking at your P&L and saying, gosh, it says I've got 350,000 profit. Where is that? Well, we're going to discover that today, and then I'll give you a tool for actually going to find it. So very first place we can look is your expenses. And we all know this, right? This is kind of inherent, like money can sneak out the door through expenses. But there's a couple specific biggies that we all know. First one is payroll. Raise of hand if payroll is your largest single expense in your business. As you think through it, payroll, ooh, no, maybe not for everyone. Okay, interesting. The next one is cost of goods. So this would be anything that's directly related to the production of your thing. Dan, in your case, this might be gas, right? Yeah, there's the most expensive one. Heather, for you,
And I did get it. I did manage to get the fuel and the maintenance categories plopped into cost of goods sold. I figured out how to do it on my own, actually.
Hey, look at you going, getting QuickBooks all set up, man. Way to take action on a couple weeks ago. So anything cost of goods related, we know that can sneak out. The third one that's often the biggie is space, right? Whether rent or an actual mortgage payment if you own a building. Those are our big three. And often we want to look there to see, is money sneaking out? Now, the reason I list these here is because there's actually a lot of you who we've caught errors in your bookkeeping where they weren't capturing a full payroll cost or cost of goods or a space cost. And it's just like, oh, this magically got left out. We had a client 2 weeks ago. We were going through their January books and things looked so much better than we thought they would. It was like, wow, this is a great month. And then we compared the profit and loss with Rocket Money, and Rocket Money showed a much different number. It's like, what's going on there? So we looked in the P&L, and sure enough, they had forgotten to put her rent on the P&L. Kind of a major thing, and it hadn't been going out for a little while. And so first things first, I look to see, are there any big rocks, right? Big pieces of my P&L that are missing. If not, then we know that, cool, P&L is fine, and we move on. By the way, if you guys have any questions or want to stop along the way, feel free to raise a hand or just interrupt me. I'm totally cool with it. And then, so that's the first one, really straightforward. Second one is debt. This is one that trips a lot of people up, and it's because it's kind of tricky. So I want you to imagine that you take out a big loan of $100,000. And then you start paying it back over time. Maybe it's an EIDL loan. A lot of you have, large EIDL loans that you got, and you're starting to pay it back over time. And you look at your P&L and you say, well, gosh, I have a $1,000 a month EIDL loan payment. Why isn't that showing up on the P&L? And the answer is because a lot of that money is going to pay back that initial $100,000 loan, right? So for every loan payment that you've got, we've actually got two separate places that money's going. The first one is principal. So principal is that initial $100,000 that you took out, right? The reason that doesn't show up on your profit and loss statement, even though it's going out of your business, is because the income or the money that you got from the loan proceeds, that didn't show up as revenue or sales in the first place. So it doesn't make sense that we wouldn't show the income, but then we're showing it as an expense. The government wouldn't like that. That'd be too much of a tax break. And so the income from the loan doesn't show up, and the outflow from paying the initial loan back also doesn't show up on your P&L. And so this trips a lot of people up. So they'll say, well, I made $1 million last year. It's like, well, but you paid back $50,000 of loan principal. So we wouldn't expect you to have that $50,000 in the bank because it went out the door. And then the second piece to that payment is the debt side of things, the actual interest side. And that does show up on your P&L. Or if it's not, it should. Any questions or thoughts here? No? Okay, sorry. I thought someone wanted to jump in for a second. So this is a big piece that if you're looking at your profit and loss statement or you're looking over your finances, I'm finding this with a lot of you that your bookkeeper isn't capturing your interest payments on your P&L. And that should absolutely be a business write-off, I should say, in most cases. And a lot of times we had this case this week where we were looking through the numbers, the interest wasn't there, and the bookkeeper said, well, it's not really easy for me to calculate that, so we're just going to lump it in at the end of the year for you. It's like, interesting. First of all, the entire payment was an interest-only payment, so I have no clue why it would be hard for them to calculate that. They literally just assign that all as interest expense. But a lot of times bookkeepers will defer interest payments till the end of the year, meaning you're actually paying it every month, but they won't show it on your profit and loss statement until the end of the year. They'll kind of lump everything together. So this is a real big one. If you're making debt payments back to your debt provider, then see, can I get my bookkeeper access to whatever portal they have so that your bookkeeper can see every month how much are you paying back in interest, what percentage of that payment, because all they're going to see is that one lump sum payment coming out of your bank account, right? And they're not going to know how much is principal and interest unless they have a visual on that. And so this is kind of an important piece to get along the way. I like having an insight onto how much interest you're paying every month, because it's a business write-off and we have to save less in taxes, but we also just want to factor that into your baseline burn. So kind of interesting, and a big piece where people get tripped up is that debt payment. And so summary is debt principal, the initial amount of the loan, isn't going to show up on your P&L. So as we're looking through an entire year's worth of finances, we got to factor that in. All right. Any questions here before we move on from the debt piece?
So Alex, we kind of talked about this a couple weeks ago.
Yes, sir.
And Alex was, we were looking through our P&L statement, and our interest for our tax write-off was really low.
Yes, teeny.
He kind of put me on target of what to look for. And come to find out, we would have missed out on a huge tax break because the interest that our accountant had put into our system wasn't even close to where it should have been.
Oh, not even close. And you would have just submitted that to your tax provider and rolled with it, right?
Last year I would have, yes.
Yeah.
Yes.
Are you comfortable sharing how much interest expense they didn't capture?
I took all the papers over to their office.
Yeah.
I think, didn't it show like 1,000? It was a little over $1,000 on that P&L statement that they were going to put in for our taxes for this year. Probably more close to 10,000 is what I ended up finding. So I mean, $8,000 that we would have paid in them taxes. So
yep. And you go figure, 30% or so on that, and it's like, hey, that's $2,500 in my pocket, right?
Yes.
From 30 minutes, maybe an hour's worth of work to go get this stuff right.
Yeah, absolutely. It was nice to have that list so that we didn't miss anything this year. It was really helpful.
Good. Well, I'm glad we caught that in time to be able to capture that for your taxes. And if it's the case that you filed last year, and this goes for anyone, if you filed last year and you missed those expenses and you look through things, you say, gosh, I've got an extra 9, 10, 20K that I could have written off. You can always file an amended tax return and say, hey, government, we got this wrong. We actually had this much in expenses. So please give me back $2,500. And they will. And so it's worth going back. In fact, we got a few clients who are going back for the past 3 years. You can refile for up to 3 years and get money back that was maybe put in incorrectly. And it's not, they don't fine you or issue a fee or anything. You just file this amended return. Your tax provider can do it for you, and you get the money back. And so might be worth looking at, Court, if things were maybe done wrong for the last couple of years. Like, hey, maybe we're due $5,000 to $6,000 back, and we would take that in a heartbeat for half
absolutely work. That's a good idea. I'll put that on our list.
Yeah. Just make a note. Hey, I want to go file an amended tax return. Or what you need to do is go figure out how off were we on our interest expense, and is it worth filing? Because they'll charge you a filing fee, of whatever it is, $500 to $1,000 to do an amended return, and you just have to see if that's worth it.
Okay,
so that's the debt side of things. And Court, for you, this was especially important the last couple of weeks when we looked into P&L. It's like, wait a second, with the amount of payments you've got, we would expect a lot higher. Right. And so just good to have a heads up on this. I'm just finding more and more as I get into the P&Ls with you guys that bookkeepers, they need you to have a second pair of eyes on what they're doing. And you kind of need to know what to look for, right? Which is hopefully a decent portion of the value that we can give within CEO Finance Academy, is having someone else to look at things. But this is an important part of figuring out where the money went to in the whole scheme of things. Okay. So principal debt, we'll just put this as sort of the star here of the debt payment, because that often won't show up on the books. Okay, the third one is you getting paid as an owner. And this is one that some of you, this might be complete review. For some of you, this will be a refresher, and some of you, it's going to be brand new. But you know that if you're an LLC taxed as an S Corp, well, first let's start with just simple LLC. If you have an LLC and you're not taxed as an S Corp, then all the profit that the business makes passes through to you from a tax standpoint. Meaning, when you go to file personal taxes, it's going to say, hey, government, my business made this money, but it really is all my profit. It's all my income. And so when you take money out of the business as an LLC and you pay yourself, that's, it's an owner's distribution. That does not show up on your profit and loss statement at all. Or if it does, they have to account for it in some kind of funky ways. And so it shouldn't show up if you're a straight LLC. And so you might say, well, gosh, I had 100,000 in profit, but I only have 10,000 left. Where is it? Well, if you paid yourself 90 grand, then that would make sense, right? And so if you're an LLC, we got to factor that in. If you're taxed as an S corp, then things look a little bit different. You get paid in two different ways. You get paid through W-2 salary, which y'all know this, right? So we've got W-2 sitting here. And that's coming out as a business expense on your profit and loss, right? You're on payroll, basically. So you're an employee. And that one does show up. So that one we're good. The one that doesn't show up, though, is any additional owner or what they call shareholder distributions, right? So all that extra money that you take as distributions outside of payroll, that does not show up on your profit and loss. And so we got to factor that piece of owner compensation into this whole picture, because any money that you move, not showing up there. And the nice benefit is we know we got some tax, some lower taxes here from distributions that we end up taking. We'll have a whole tax day we'll have a multi-part tax series coming up in a month or so as we get into personal tax season. So owner's compensation, really important one, specifically any distributions that you've taken. Cool. Any questions there before we move on? I know we've had a couple of instances where a bookkeeper didn't catch that the distributions were distributions and they categorized them as payroll. And to a pretty large extent, we're talking like tens and tens of thousands of dollars for one client. And when we caught this, it's like, hey, let's go ask. And so I'm actually waiting to hear back right now from the bookkeeper on that one. But that could get really messy because if he were to go get audited, the IRS would see, hey, you took all this extra money and you called it a business write-off, but you didn't pay payroll taxes on it. That's a problem, right? So we can get ourselves into trouble with the IRS that way. So we want to make sure the distributions are not sitting there on the P&L, but our payroll is. All right, so owner comp was the last, third one. Final one, pretty straightforward, but sometimes we don't think about it. It's assets, right? What big stuff do you buy that doesn't show up on your P&L? Something like maybe it's a vehicle. Maybe it's a big freezer if you're Julia's business. Maybe, Heather, for you, it's the next car, right? Whatever it is that you end up buying through the business, that's a large expense where that expense gets broken out over years, that's not going to show up on your P&L right away. In fact, for some clients, based on what their CPA will tell them, even when they buy something as small as a computer, that's not showing up as an expense right away. They're depreciating that over 3 to 5 years. And so you just have to think, have I bought anything big that would be a lot of cash out the door, but isn't showing up on my P&L? Cool. So vehicles, larger equipment, furniture sometimes, a building certainly, any of those assets that we would say are kind of bigger purchases that are going to be broken up over the years, those won't show up immediately on the P&L. Okay. So those are our big four. Where did the money go? It likely went to one of those four places. It either went out the door in expenses, and we want to make sure that they all got categorized correctly on your P&L, not missed, or it went out as principal debt payment, or it was owner compensation in the form of distributions, or it was buying an asset. Now, we could say maybe there's a couple other big categories that could fit in here, or little categories that fit under these. If you think of one, feel free to shout it out and we'll add it onto this list. But now the question is, cool, how do I go through and actually look at this for myself? And how do I make sense of all this stuff? There's a bunch of numbers floating around. So any last questions on here before we actually go hit the spreadsheet together, hit the dashboard and try this out? And let's go back here and we'll hit back into this guy. Were any of these a surprise to anyone? Like, oh yeah, I didn't think about that. At this point, we've all talked through this, right? So hopefully for most of you, it's like pretty straightforward, but not something that we're just taught, right? Not something that our bookkeeper sits down and says, hey, just wanting to give you a heads up as we get started with your books right now. I'm not going to categorize principal pay down. I'm not going to categorize distributions that way. I'm not going to categorize assets. Just kind of assume that you know, right? So let's dive into, make you all editors, and let's share this link here. So what we're going to walk through right now is, if I can pull up the chat, that guy right here, /copy. Cool. So I want you to click that link, and it's going to bring up something that looks like this. Now, full disclosure, I have not fully tested this yet. I finished it this morning. So we'll see. I ran some quick numbers to make sure that it looked decent, but there's a very decent chance that something's off here. So this is a beta test, if you will, of this. So you're going to click make a copy. And if you wanted to, once it's up and the copy is made, you could put it in your personal dashboard that we've got for you. And to do that, you'd come down here to this tab and right click on it and go copy to, and then existing spreadsheet. And then it'll bring up a whole list of all the spreadsheets that you've got. And you can find it right here. It might be called, whether it's called finance dashboard or cash flow clarity calculator, as it used to be called. Pop that in here, and then we can roll from there, right? So if it's like, hey, I'm going to put this in the finance, let's call this new CEO. I think I've got one called new CEO Finance Academy stuff. There it is. Cool. So we'll pop it in there. Bam. And then it puts everything in there. Okay. And you can see it should be in your dashboard, nestled at the very end. And it might have a green screen. Let's go see if this one turns green on us. Kind of a funny thing where our spreadsheets that we've copied turn green on us. Hey, it didn't. Good stuff. Cool. If you had any issues with that, you don't necessarily have to move it into your dashboard, but if you wanted to, it's there. All right. So this has all these 4 different major categories that we just talked through. Before I dive into it, any questions or issues accessing it? No? Sweet. So the one thing that we didn't talk about is kind of factoring in your bank account balances here. And so if I were doing this for my own business and I had a specific time period that I wanted to look at, one other piece here that I need to put is kind of a time period thing here. But let's imagine that I wanted to look at 2022. It's like, I felt like 2022 was off somewhere, right? It's like, I don't know what happened in 2022. All right, well, here's what we do then. We would go look at the beginning and ending bank balances, and we'd put them in here. So if you have a number of different accounts, I've allowed 10 different accounts here. Hopefully you don't have too many more than that. If you need to, you can add them on. But type in what different accounts you've got here so that you can make it easy for yourself. So maybe you've got a main checking account, maybe you've got a tax savings, maybe you've got business growth. I don't know, maybe you have a payroll specific one, maybe you have an owner's comp, right? Whatever, put in what you need. And then you're going to go look at the beginning of the time period that you're dealing with. So let's pretend it was last year, right? I would look at the beginning of January. So January 1st, 2022, what was my bank balance? In fact, I would probably look at it at the end of 2021, right? So December 31st, 2021, what was the bank balance in each of these? So let's do some hypotheticals here. Let's say that my checking account was sitting at, 30,000. My tax savings, I had saved up a whole bunch of money, and this was, 40,000. In my business growth account, I had 5K, and I had stashed away in a payroll account, 10,000. And let's say I don't use an owner's comp account. Okay. So now I've got a beginning bank account balance, and I see that I started the year off at 85K. Now we're going to go get our ending balances. Okay. So I'll go look in the main checking account on December 31st at the end of the year. I'll see what was in there. And maybe I have something like, let's call it 20,000 in tax savings. Let's say I saved up, 25K. In business growth, I'm at, for sake of putting some numbers in there, and payroll, I've got 15K. All right. So now I've got a true beginning and ending look at what's actually in the bank today. So now we can see the difference, okay, in each account. Where am I at, right? And then as a whole, how am I doing? So I get there and I see, all right, that's the difference. And that's what people will often look at. They'll only look at the bank account and say, well, gosh, I had, let's call it 300,000 in profit. Where is that? I'm actually down 22,000. Something's off and I have no clue what I'm looking at, right? Where's the money? Well, That's what this is for. So next, let's go look at a couple different categories. I've really simplified these. So it's just like, all right, caveman Alex here can understand these. The first one is money in. Okay, so any new money into the business. What money came in? Well, we've got, first of all, our net income from the P&L. So that bottom line of your P&L, whatever it shows as net income, this has to be a cash basis P&L is the only issue. If you run accrual and you don't have a way to go get a cash basis P&L, that would be a problem looking at this, because accrual basis doesn't look at money that goes into your account and money that goes out of your account. It looks at invoices you sent and invoices you've received to pay, right? And so it's not necessarily going to be an exact look at cash in and cash out. So you want to look at a cash basis profit and loss statement, which you can request from your bookkeeper, or you can go into QuickBooks or whatever you use and just choose that it's on cash basis. And let's say that on our cash basis P&L, we have 300,000. We're cruising. All right. So there's 300,000 in from our P&L. Now remember, this is revenue minus expenses. So it's just profit, so to speak. Okay. Then we've got loan income. And remember earlier I said, hey, it's not actually income into the business. It's not sales, right? It's not revenue. It's just money from a loan. So put any money in that you had. So let's say that you took out a capital loan from, I don't know, PayPal Capital for $30,000. Cool. Well, that would be money into the business. Okay. So we got to put that there, because even though it's not on your profit and loss statement, it would show up in your bank account. So we got to factor that in, right? And really what we're looking at here is just actual cash, right? Anything that actually would have gone in or would have gone out of my bank account. So we have that, got net income, we've got our loan income. And then if you happen to sell any assets, let's say that you sold, let's say that you sold an old vehicle that you had and sold it for 40K, right? That's new money into the business, relatively speaking, or at least new cash into the business. And then let's say that we had, there could be some other kind of money in, I'm sure I'm not thinking of. I don't know. Let's say we had 5,000 of other money. Maybe at some point you had to put an owner's, some money in as an owner to the business. Things got really lean. You deposited in 5K. There we have it. Okay. So that's our money in, and this tallies it up. You say, okay, well, we did put in 375,000. So now you might feel really confused. It's like, whoa, I ended at $22,000 below where I started, but I had 375 of additional income that came in. Well, now let's go look at the money out side of things. And in money out, there's really these three different categories that we talked through. There's owner's distributions. So let's imagine that, you're taking your W-2 salary and then you took some additional distributions. And let's say that this year you felt like things were going so well. You saw your profit happening. You're like, all right, I'm getting a payout and I'm going to take 250K this year. Wouldn't that be lovely? All right. So we took a bunch out through there. I don't know. Maybe it's not that juicy. Let's put it at something like that. Cool. So we took out 150,000 of additional owner distribution. And then we need to go look at principal debt payments. This is by far, I think, the most tricky one to go find, because you're not just looking at debt payments, right? Debt payments alone have principal and interest. And so this one would take a little bit of legwork to go see how much did you pay. There's a few ways to do that. We could either go look at our individual loans, and often they'll show you over this time period, here's how much principal you paid back, right? So if I took out a $30,000 loan and I paid the whole thing back, well, then that would be pretty easy. It'd be 30 grand, right? But let's say that I had some other debt as well. So not only did I pay back that entire 30,000, but I was paying off old debt as well. And so I can either go see directly from my loan provider how much I paid them back, or the other way to do it is if you can see how much in total loan payments you made. So let's say I made 300,000 in loan payments for the year. And then I know how much interest I paid for my P&L, which let's say that it was 50,000 of interest. Then I would take my 300,000 that I paid total minus my interest portion. So 300 minus 50 would be 250,000. Okay. So again, for the sake of argument, we'll just say 250K. I need a zero there. Cool. All right. And now we're starting to see, hey, I did spend a little bit more than I had come in, right? This is starting to line up. In fact, if I just left it like this would be really, really close to what we actually have. Let's see. I got to change this answer here. Blah, 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 blah. more than expected. We'll go like this and just delete this. Make this a little bit simpler. There it is. Oh, it hates me. What I delete? More than expected. There we go. Oh, it still hates me. This is what happens when you mess up with your own formulas. There we go. All right. So if we were to leave it like this, let's imagine that we didn't have any assets purchased here. And see, I already found the error. I didn't factor in error assets purchased. So assets aren't going to factor into this. I should go change my my copy here. Oh, and this is lengthy expected ending balance. This minus this minus this minus that. There we go. Okay. If you wanted to go change yours, you're like, okay, what did he just do? I hadn't factored in assets purchased to this expected ending balance. And so go to this cell here, N8. And right in between here, I just added minus K5. So if you wanted to go update that little cell there, minus K5 to this guy right here, expected ending balance. Cool. And let's just double check that. 10,000. Yes, that changes it. Cool. All right. So I'm at this point where I've got my bank balances, I've got my money in, I've got my money out. And now let's look at assets. So let's pretend that, I sold one vehicle for 40 grand. And let's say I bought another, and let's just call it, I don't know, new vehicle. You need to put the actual cash that you paid for that asset, not the total value of it. What is the cash that you put down? So let's say I had to put down $10,000. Okay. So I should make a note here that this is the actual amount of cash that you paid for it. All right. And then let's say I bought, I don't know, some piece of equipment, and I paid cash. I had to put down 5,000. Cool. So there I am. I've got my bank balances, my money in, my money out, and all the assets that I purchased. So now let's go look at the summary real quick. So it tells me here's how much I had to begin the year. At 85K, right? We just got that from our bank balance. Plus any new money in from my profit, from a loan that I took, and from the vehicle that I sold, and 5,000 that I maybe put into the business. So we've got starting balance plus money in minus any money that we took out of the business. So we maybe took some owner's distributions. We paid back some principal debt. And then we also paid out 15K to our vehicles. Now this is interesting. This is, here's how. That's why I told you guys wrong. See, this is why I don't release it to you guys till I've actually thought through all of this. When I told you expected ending balance and taking K5 out of here, I didn't mean that. I meant to take it out of money out. So it should be H12 plus K5. There we go. Jeez. All right. Sorry to catch you off there. So I took the N5 out of this guy and I added him here to N7. Oh, that was messy. Okay. So I had K5 there. That was additional money out. So now we're at 410,000 out. And now it gives me an expected ending balance. So if I started with 85, I add 375, subtract the 410, I would have expected that I'd be at 50,000 in the bank at the end of the year. My actual ending balance was 63,000. And so now this says, well, what's the difference versus your expectation? It says, okay, you have 13,000 more than expected in the bank account. Hopefully this makes sense, kind of how we got here. It took a long time to build this formula. This is a couple hours of my life to get these to do it right. But now this tells me, hey, I'm here. I have 13,000 more than I would expect. And now you get to decide, are you cool having 13,000 more than you expected, or do you want to go find the difference? And if you want to go find the difference, then we need to go look at a couple of different things, right? So especially if you have significantly less money in the bank than you expected, this is where we need to dig into things. I'll tell you, it's almost certainly in your profit and loss statement, like 80% chance it's in your P&L. But a couple of things that I would go check. First of all, bank balances. So if you're going off of a balance sheet from your bookkeeper, and this is off, I would go check your actual bank accounts. Okay. And I'm finding a lot of balance sheets are just flat out wrong, right? Balance sheets, for whatever reason, who was it? I think Court, we were dealing with this. was like, whoa, the balance sheet doesn't show anything, doesn't show all the things, right? For some people, I'm finding that their bank account balances are just completely flat out wrong on their balance sheet. I have no clue why. But their bookkeeper, with how they're looking at it, either hadn't updated something for a month or two, and so it threw things off, or they didn't have all the assets in there. Again, we're just looking at cash, right? I'm not listing all of your assets here. I am just looking at cash to try to figure out what's the cash difference. We could throw all your assets into this and see a total beginning and total ending, but I'm just trying to simplify it to only looking at kind of the cash difference in the business. So first I'd look there and I'd see, hey, was I using my balance sheet to find my bank balances, or did I look at the actual amount that was in there? And oftentimes, if you go look in your physical bank account online, they'll show you a daily ending balance at the end of a certain day, right? It's a great way to find it. Or if not, you can use a bank statement. And the bank statement itself should tell you, hey, here's the month ending balance. So that's the first place that could be off. Second place is your profit and loss. And this one I find to be the most common, where it's like, oh, they completely forgot these expenses, or they double counted some of these expenses, or they listed. We had one client who had paid taxes, had way overpaid on taxes. We're talking like 6-figure tax payment. Okay, it was nasty. Yeah, everyone's eyebrows just went up. It was a nasty tax payment. Guess who's filing an amended return? 6-figure tax payment that got categorized as a business expense on their profit and loss statement. Let that sink in for just a minute. First of all, their accountant had totally screwed up taxes. Second of all, their bookkeeper had totally miscategorized things. It's been fun getting that stuff cleaned up. And so we know that a personal tax payment is not a business expense. That's an owner's distribution. It shouldn't have shown up there. And so that was throwing the numbers off wildly with what we expected. And so really drilling into the P&L. And again, if you're working with us here one-on-one, this is part of what you're ultimately paying us for, is, hey, let's drill into this stuff and figure out if we can find the error. Because a lot of times your bookkeeper isn't going to sit down and do that with you. They should, though. In reality, they should. So maybe P&L is wrong. Loan income, maybe there was an extra loan that you forgot. Maybe you forgot a sale of an asset. This owner's distribution one gets a little bit messy, right? It can be hard to go figure out how much you've actually transferred. And I think that this is the next biggest one where errors happen, is principal debt pay down. And so in order of where I would check, first I'd check bank balances, because that's easy. And I'd make sure that I'm using my actual bank, not my balance sheet. Second, I would dive into the P&L and go figure out, okay, what might be off here. And third, I would look at this principal debt pay down, which again is tough to nail down. And then, I might go double check, hey, were there any new assets that I forgot? And Court, you know this all too well, that if we just go off our balance sheet to see which assets we've purchased, that may not be accurate either. And so we can't just rely on the balance sheet to tell us this stuff. We've got to go through and think, okay, what equipment did I buy this year? What vehicles did I buy this year? What furniture did I buy this year? And there might be something that you bought that you expected to show up on your P&L that didn't. Like, again, a computer, right? Or if you bought a number of computers, you might be thinking, oh yeah, I'm sure that's in my P&L. But it's like, hey, double check. If it's not there, then they're probably saying, oh, this is a balance sheet kind of purchase, and we're going to break it out over the years, but you actually put the cash out on it. So it needs to go on this sheet. Okay. So that's how we check for discrepancies. We do a little bit of forensic accounting, and we go dig to find what's the error, and then how can we make sure that we don't make that error in the future. So for the client, for example, who had the major tax error, now we've talked with their bookkeeper and said, hey, let's make sure that we don't categorize any of these payments to taxes as business expenses. In fact, I see a lot of, for whatever reason, a lot of bookkeepers lately have been categorizing personal tax payments as business expenses. And so if a bookkeeper has made a significant mistake, your role is to decide, one, do you believe in their competence and their ability to listen and fix the thing? And if they're good and responsive at fixing the thing, I'm cool with it. Bookkeepers make mistakes. So do we as business owners. If you find that their level of communication and their fixing things is not up to speed, like, cool, maybe you need to look for a new bookkeeper in the first place. But that was a lot to cover to get to how much is actually sitting in the bank account versus what you expected. And now we have a firm number that we can go look at to say, where is the problem? So if I had 13,000 more than expected,